Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. For as much as we've been pounding the table on inflation, you really got to watch out for when that starts to come down and then we start dealing with deflation. And in fact, we may already be seeing the effects of that not being talked about right now, but it's something that you need to be aware of. So let's get into it.
Trade Genius.
Hey guys, really briefly before we jump into this video, appreciate all the likes and subscribes, and if you can ring that notification button, that really helps us out. In addition to that, if you guys don't mind, head over to tradegenius.co, check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live, and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that. Hey Bob, so really interesting that you showed me the graph there, and I was really surprised to see that, potentially we're going into a deflationary cycle here.
Yeah, look, Phil, I mean, you've been saying since the end of 2021 is that, they're going to we're going to Eiffel Tower the entire liquidity move from 2019 into the pandemic response, and it's all coming back out, and it's coming back out fast now. So a chart I want to show you guys this is import and export prices. I mean, this will blow you away. Look how fast the prices have fallen.
Yeah.
And what's going to happen here is that when you start getting deflation, people worry about like inflation, but when you get a deflationary environment, it's insidious, because what happens is people saying, hey, if the price is falling and I don't need it, I can wait to buy it later. And this is what happened. This is what we're following in Japan in this environment, is that, your consumables, that's one thing, but anything durable, people are going to wait on. And so now you have high interest rates and you have deflation starting to take hold. And I think they're probably related because, you can't finance any of this stuff, Phil. So we're plunging. And it's not just, China doing it to us, but it's also our exports are falling too. And I think this is just another case where it's going into a recession. I think this is going to keep falling. And regardless of what Powell does, we showed you guys this the other day that the 2 years already anticipating this. And I think with the geopolitical environment, there's not going to be stimulus checks being written for people in at least the next 18 months or so. The House Republicans just won't go for it. And I think you're going to see this number just continue to fall. Now, most people will say this is great news. And it is to an extent. It is great news. But it's bad news for businesses that are holding inventories, because they're going to they're going to have to liquidate these inventories, because the new stuff coming in is cheaper than the old stuff. And they're stuck with inventory they paid more for. And so they're going to have to liquidate it because somebody's going to undercut them in price. So this is one of those things, Phil, where it's going to it's good news, bad news. It's bad news if you're a business with inventory. It's a good news if you're a consumer. I was just reading you the circular for groceries, and we're able to get steaks here in California, choice steaks now, ribeyes for $8.99 a pound. I mean, when's the last time that happened? We're getting chickens again back at prices we got in 2018 and 2019 too. So I'll throw it back to you and get your thoughts on that. I think we're seeing this big rollover happen, and energy's starting to struggle too.
Yeah, and that's something you brought up too, where you're becoming less of an energy bull, which I think so. I think, I thought oil would probably find some support at 60, but I think by the time this was all said and done, we would probably or potentially see high 40s, but I don't think it's going to be very long there. And that would go along with a lot of other things too that would dip down to levels that were unexpected, because I still see a lot of sentiment in this market about how, the worst is behind us and this and that. And, inflation's getting under control, but like what we're seeing too though is that we're starting to see some deflationary effects. Even the Fed has recognized that, and it can certainly unwind. And yeah, I think we're gonna probably Eiffel Tower all of the excess from the COVID pump, because that was all artificially induced, right? So the only reason why asset prices on a lot of things were where they were was because of all of that stimulus that went into the economy unnaturally. And that goes for Bitcoin, Ethereum, especially the altcoins. Wherever the altcoins were prior to COVID, expect them all to revisit that level sooner or later. Most already have started to get there, even stocks as well. I just think that that's part of how we're going to get through all of this and get basically this cleansing that needs to take place to kind of get us back to square one and, you know, get this whole COVID pump cycle, whatever you want to call it, out of the way, kind of get back to basics, you know, and get back to home base, and then we can start building from there. Because there's a lot of upside, you got AI and a lot of things going on technologically that there's a lot of upside going into the rest of this decade. We just have to get through this funk and clean up the mess, so to speak.
Yeah, and if you look at it, today's Friday, we're talking is Bitcoin was down. Mara, the crypto miners, they're back in the eights again. You know, if that gets down into the low sevens, it's probably a good area for at least to take an initial position on it. And then Airbnb was at $132 before the earnings ad this week, and travel has been super strong. Well, today Airbnb closed at 105. They took a 30% haircut, and their earnings and their revenue were kind of in line, but they're just overpriced. And that's the other thing too, Phil. I think, asset prices are going to come down to that 2019 level too. And that's why, guys, our macro is bearish. I mean, look, if you can keep your job through this downstroke that we're going to have, and you're not stuck with variable debt, your standard of living should improve. Okay. But if you're none of those things, or you're close to retirement and you're sitting on overvalued assets to retire in, that's where we're begging you to have a good hard look at your position and talk to your financial advisors, because I just think that, we're looking at probably a lost decade for asset prices and, stocks and in real estate for sure.
Yeah. All right. Well, thanks, Bob. Really interesting. And I think that's going to play more of a role in the second half of the year for sure. Let us know your guys' thoughts on this. Are you seeing the deflationary effects happening in anything that you're dealing with on your end? We'd love to hear from you below. Otherwise, please hit like and subscribe, and smash that notification bell and set it to all. It really helps out our channel. And we'll see you on the next episode. Take care.
Trade Genius.